G'day guys, welcome back to the Devon Too Good Investing channel. In this video today, we're going to be watching the Jefferies Virtual West Coast Consumer Conference, where Tattooed Chef's management team will be speaking about the business. So before we watch this, guys, and I'll provide my thoughts along the way, make sure you like this video, make sure you subscribe, and let's get straight into it.
Welcome back, everyone, to the Jefferies Virtual West Coast Consumer Conference. Next up, we have Tattooed Chef, an on-trend emerging plant-based food company. We're honored to have with us today from the Tattooed Chef, President and CEO Sam Galletti, the Tattooed Chef herself and Creative Director Sarah Galletti, COO and CFO Stephanie Diekman, and Chief Growth Officer Matt Williams. Excuse me. So with that, look, I'm going to turn it over to CEO and President Sam Galletti for a few opening remarks, and then we can just jump into Q&A. So go ahead, Sam.
Thanks so much for having us, Rob. Great to be here. Just a real quick recap on who we are. We're an innovative, high-growth, plant-based food company. Sarah is the Tattooed Chef, and we launched our brand in 2017. Today we have over 13,000 stores now that are carrying Tattooed Chef in the United States across 5 frozen food categories. We expect our growth revenue to be in excess of 40% this year. We are a fully integrated facility. We have 4 production facilities, and we just announced a most recent one, Belmont. We are expanding into. We will be expanding into ambient products with salty snacks and bars in 2022, and we're just really excited about the growth opportunity here at Tattooed Chef.
Perfect. Thanks, Sam. So look, I mean, I normally don't jump into quarterly results, but given you just provided them yesterday, I thought we could just kind of get a couple of things out of the way. I've had some questions come into me. Maybe just the first piece. You revised the guidance down a little bit for the year. Seems like Q4 implied revenues a little bit lower kind of than we've seen, but also seems like you have good explanation for that. So just wanted to kind of go back and kind of clarify one. It seems like kind of what you've been saying is maybe there's been some learnings in terms of potential seasonality, and then also there also seems to be kind of just that impact, just given kind of out of the more heavy promoted kind of first half Costco period. So I'll just start with that. We can take it from there.
For sure, Stephanie, take that one.
Fantastic. Thank you, Sam. So when we were looking at Q4 and our decision to lower the revenue guidance by the amount that we did is more focused, as you stated, on the fact that during Q1 and Q2 of 2021, we had big promotions within the club space in the form of limited time offers. We had a big promotion on the organic acai bowl and on the organic riced cauliflower stir fry. And those were certainly gains within that space. We were very excited when Q3 came in at $58.8 million, and it didn't contain that same level of promotional activity that was occurring in Q1 and Q2 of the year. And so it really shows the growth of the brand. But as we roll into fourth quarter, we also understand that individuals' spending habits and the way that they eat it changes a little bit. And last year, everybody was really affected by COVID and not able to really go and hang out with their friends and their families and really celebrate the holidays as they have done in past years. And so the company's looking at the trends as a whole, and we expect with the COVID restrictions having died down some that people are going to indulge and they're going to overindulge. And you're going to see a little bit of that flip in really wanting to get into the holiday season this year, and that doesn't always include healthy eating. Club makes space for holiday items, as does traditional grocery and mass market. And so we're really prepared for that. And that was the driving in our thing. We're still excited about Q1 next year. It is organic month. It is healthy for you. And we believe that consumers will spend the way that they traditionally have. In our history, Q3 and Q4 tends to be very flat growth for this exact reason. We don't see a lot of upswing in Q4 or anything else historically, and we wanted to be very mindful of that.
Okay, makes complete sense. And then I guess, second question I had, and I've had come into me as well from some investors, was just trying to essentially kind of right size some comments you made around consumption sales yesterday relative to what was reported, right? So it sounds like, when you're looking at the kind of the base business and the data trends, that consumption's up a fair amount, while at the same time when you report, kind of the implied branded revenues didn't grow as much as consumption. My sense, though, is when you speak to that consumption, you're speaking to kind of a like for like basis, base business, maybe X heavy promos or LTOs or what have you. So I wasn't sure exactly myself. So again, maybe this is you, Stephanie. I thought I'd give you the opportunity to try to clarify some of that commentary.
So when we talk about that, what we're really focused on is we acquired New Mexico Food Distributors in Karsten back in May of this year. And we have to keep in mind that they are a private label co-manufacturer. And so they're not outselling the Tattooed Chef brand. So when we look at that business, it does make it appear as though that growth to the 58.8 million in Q3 number, there's a portion of that it changes the percentage of Tattooed Chef brand and what's happening. During next year and by the end of Q1 2022, New Mexico Food Distributors will be manufacturing Tattooed Chef product and selling that. The Karsten facility is expected to be operational at the end of Q1 2022, and that's when we'll start to see that shift back. The same will hold true when we start to look at Belmont. Belmont is a private label co-manufacturer, and that's where the beauty is in the growth of those acquisitions, is the fact that we have all of this runway to grow and grow the Tattooed Chef brand out of those facilities.
Okay, understood. And then I guess maybe more generally, we've heard from a number of companies, big and small, right, that the kind of innovation pipeline has been kind of pushed forward a little bit, right? There's been a little retail complexity that's been layered in, given kind of the operating environment. Not always the case for everybody. Seems like you've been able to get some good innovation in. Would also seem like maybe, at this point you would have already had conversations with retailers about potential resets, in the early part of next year, first half of next year at least. So I'm just curious, kind of maybe any color you can provide and how some of those conversations have gone. And naturally would seem if the velocities have been so impressive kind of on some of the core SKUs that the probability of getting new distribution wouldn't be low. So I don't know.
So from the standpoint of the innovation pipeline and during COVID, I think that so as far as the buyers were concerned, it was very difficult to see buyers in 21. So as far as like introducing new items, it was pretty incredible what we were able to accomplish as far as still getting so much distribution and so many SKUs in 2021 with what was happening. And then in addition, I think that we fared extremely well as far as our percentage of delivery. I mean, we were above 97% as far as all the orders that we've been delivering during COVID. I think that, that just attributes to our manufacturing facilities and that we're a grower. But just, to come back just basically on your question, Rob, it's just, I think that it was more difficult to introduce innovation, but we were able to do it still. And we got great distribution. And so that's why we're so optimistic for 22.
All right, fair enough. Yeah, Matt, I don't know if you want to chime in.
I'll just add on that. I think that, what I would share is that, we're already talking about 2022 today. The reality is that we had retailers kind of try Tattooed Chef in 2021, right? We had 5 categories that were in: single serve entrees, pizza, breakfast, veg, and then family meals. And we had a lot of retailers that were willing to try our product this year to see how we would perform. Can we translate from club into retail? And so what we're really excited about is that as the year has progressed and our sell-in has progressed even through 2021, is that retailers are taking more SKUs as the year has progressed. So like we started with Target last year and they started with 2 SKUs. They're now up to 25. The numbers started kind of the numbers started to come to fruition as retailers were looking at our performance. And as the year went on, retailers like Kroger took 12 SKUs out of the gate, right? That's what we launched with Kroger. And so now we're able to really go back and fill in with the categories that of products that Sarah has created and fill in those gaps. And so that's something that is a part of our strategy as we move forward. So our stated goal is to get to 30 SKUs of frozen. With not only our core, but now with the new items, we think that is extremely attainable as we move into the next year.
All right, perfect. Good answer. All right, so, and I guess again, if we think about next year and what potential revenue growth drivers could be, and Stephanie, you mentioned this earlier. It sounds like the new frozen Mexican products, right, should start to sell in sometime in the first half. So I would assume, as you speak with those retailers, those items, would hopefully be incremental, right, on top of whatever the base is in other, respective retailers. So maybe just, I don't know if Sarah, Matt, whoever wants to kind of tackle this question, just kind of, when you think about these new products, these are new products coming out of a new facility, a little bit new for you, but gives you that incrementality. Kind of how have some of those conversations go? Kind of what's the overall expectation as you get through next year?
So I'm fortunate that I get to try all these great products as they're in development here in the San Pedro office. So they're amazing. And we are already presenting, and we already have retailer acceptance. So we have significant retailers, not immaterial retailers, that have already agreed to carry some of these products. We really are thinking about them in two different ways, right? There's the, kind of what we've defined as kind of the handheld items, which is kind of a new category for us. It's really a new door, quite frankly. The burrito category is a separate door from where our entrees sit today. And so we're entering a new category, right? It's really called frozen snacks and appetizers and spins. And so we're really excited about that. And Sarah is bringing some amazing innovation there. And so we're already getting retailer acceptance, right? So we're already getting ready to produce for purchase orders for the first quarter of next year. And so that's why we do view this as completely incremental to what we're doing today. And then again, the Mexican entree space is one that we think is ripe for plant-based innovation. And we believe that we can obviously go after lower performing SKUs in that single serve entree space and introduce a line of plant-based innovation that Sarah's created. So all above and beyond our originally stated goal of 30 SKUs. We haven't quite figured out how that feeds into kind of what the new target is, but still very aspirational, something we're excited about.
So, if I'm just trying to envision what the product is, I guess it's like what's clear here is there's a burrito, right, that's coming. There might be a number of flavors of burritos that are coming. If I think of kind of another, let's say, kind of core competitor in that space, they sell some of those burritos like individually wrapped. Is that I'm thinking where maybe that's about the same idea. Right. I mean, that's
yes. I mean, look, at the end of the day, what we really wanted to create was something that was different, but also familiar. And so I think that we've really done that. And I look forward to consumers to really tasting this product because it's delicious. It's different, but familiar. So right. Just really, I can't wait. I really can't wait for everybody to check it out.
Okay, cool. And then just to clarify, in terms of, Mexican frozen entrees, do those need to be made in that new facility, or can you just leverage the old facility on the entree side and make certain products there while the other facility is kind of more like burrito, kind of core Mexican food base? Not sure.
Rob, that was really the beauty of this acquisition, is that there's over 300 people that are already working at this facility that are familiar with Mexican food products that will just be in line. The equipment, the packaging equipment, of course, will improve some equipment to get higher efficiencies and productivity. But yes, the foods, the Mexican plant-based line will be made in the Foods of New Mexico facility. Specifically, was considered for that whole thought.
There's efficiency there because obviously we're producing these tortillas there.
Right. Right.
So
Got it.
Efficiency with taking that item and utilizing it for the items that we're going to be making.
And then, I was going to get to this later, but maybe this is kind of conversational now. Handheld burritos can be sold, in different channels. Just kind of given the give and go, dynamic of the product. Obviously, going to your pre-existing retailers is kind of probably where you start, right? And you can get maybe a lot more volume. But I've also heard you say, there are, opportunities with some of the new incremental capabilities you have to also help you extend into different channels. If I think about kind of I fully realize that's part of the strategy, right? Longer term. Just sit here though first and say, okay, hey, we're in Kroger, we're in Target, these are kind of core customers. Let's go to them first. Let's make sure we get this done, get this right. And then, later we can start thinking about channel extensions and opportunities. Just trying to think about how that kind of what the timeline is in each of the different pieces of the strategy.
I mean, those conversations are happening now, Rob. I mean, we've already started to have these conversations with, the C-store retailers, the large players there, the drug channel as well. We're already beginning to penetrate into, kind of food service through ready-to-eat products and like C&U, college and university with our current line of products. So this is a great complement to that. And very interested, right? Like I said, I mean, we spent this year getting set up from a distribution standpoint, and we're now in a place that we can serve that channel of business. So, and the other thing is they're all, one of the things about this brand is that Sarah's connecting to this millennial kind of Gen Z consumer out there, and where they're buying their products today is changing. And C-store has become a much bigger part of their consumption habits. And so they're trying to target that consumer. And so naturally, more plant-based foods would be a complement to what they're doing today. And that's why we're so excited to launch these products and bring them to those channels that we just talked about.
All right, cool. Maybe Sarah, this one could be for you, given you're the creative. Look, every category in everything in consumer, frankly, from clothes to food, and this is food, is always competitive, right? Everybody's chasing everything else. So I'm just curious, when you sit down, kind of pen to paper, and you're thinking about what the next SKU is or flavor, what have you, or how to kind of position it, as Matt was just speaking to, like how do you stay ahead? Or is it not necessarily like you're thinking about how you're going to stay ahead a year from now? It's just making what you think people want. I don't know how complex it is.
Yeah, I think it's a little bit of like kind of, predicting the future of what people want to consume. And then it's also just being like in it. I'm in Los Angeles. I go to restaurants. I talk to chefs. I talk to my peers. I look at trends of what's happening on social media. It's just there's so many different elements of understanding what consumers are looking to eat and where they're going to, what products they're going to look for in the future. And I think we've done a really great job at just understanding that consumer and knowing what they want. And I think that's proven in the products that we've created. Also, our products are great tasting. Our products are good. When people think about plant-based food, they're a little bit hesitant because the idea behind it is that it doesn't taste good. But not only are our items innovative, they also taste delicious. And I think that we've really tapped into that idea. And, sometimes it does get complex. And I like the complexity behind food. I think I like to understand what drives consumers into the store. And I think we're doing it well.
Good stuff. I like it.
Thanks.
All right, and then I guess maybe just jump into the ambient products, right? They've kind of been brought up in theory, right, for some time. Now there's, sounds like the Carson facility, you call it. I think that opens up kind of some, I don't know, mid next year and a Q1, something like that. But also sounds like kind of, the innovation pipeline, brand formulation, what have you, packaging is all already sounds like in place such that you could already start to actually manufacture product and hopefully sell it to somebody kind of by, let's say, second half of next year. So I guess one, maybe just confirm that. And then two, as you're thinking about those ambient products, kind of like you threw out the burrito option. I mean, we kind of saw that coming, but it's nice to just kind of hear exactly kind of what some of those products are. Ambient's, a word that non-food people really even know, frankly. So I don't know, Sam.
Ahead,
I don't know if you want to, or you, Sarah. Go ahead. Either one.
No, go ahead. Matt, probably.
No. Look at, I mean, from the ambient side, I mean, yes, that's correct. Where equipment will be in place and we will start being able to produce our snacks in the Carson facility by March is the goal. And so to be able to achieve and have sales in the later part of 22 is definitely our goal. And we actually have a little pilot line already set up in the plant too that is making samples already of the concepts that Sarah wants to create. So it is a full core press. And the beauty is that, again, so much of the infrastructure was in place with this acquisition. Typically to have some kind of this kind of a production line in place could take couple of years. I mean, and so that's the beauty of the acquisitions that we're making out there. And as well as the Belmont acquisition, as far as the bars and the snacks. I mean, it is an existing building doing a great co-packing job for some of the biggest bar brands out there right now, but it's 100% co-pack. So I really could see potentially we could be out in the market on our bar line actually even sooner than our snack line, because that is already an existing operating, SQF audited, facility selling great product. So definitely ambient products is a thing that we intend, both snacks and the bars, that we really intend to really hit the market hard for 22 and hope we could get some distribution. As far as the innovation to those things, it's all Sarah, and she's got some incredible concepts.
Cool, no pressure. But yeah,
Right.
I mean, from Carson, it is salty snacks, and we saw an opportunity and we're going after the opportunity. So look forward to sharing those products with everybody.
Fair enough. And then I'm just curious, maybe this is more Matt, when you speak with the retailers, like, is there any way you're able to kind of leverage buyer to buyer, right? Sometimes, there's the frozen entree buyer, and then you've got to go start with the brand new person that's doing salty, or I'm hoping kind of frozen introduces salty and you take it from there.
Yeah, no, I think that, we have a great broker partner that, when we were in, Sam even alluded when he said, when you find your right broker partner, I want you to look beyond just frozen. And I was kind of scratching my head at the time, but now I know why. And, so we have a great broker partner that has sold across these different categories. Again, I think that is definitely helpful. I think that the idea of being able to promote at more of a family level than at an item level, I think is something that's going to be an opportunity for us, which will create efficiency. Retailers are looking to talk more about plant-based foods to their consumers and educate them on that. And I think that us being able to do that with a broader portfolio of products, I think is going to set us apart. And it's just this connection to this new consumer and this valuable consumer that Sarah has tapped into, and that I believe it trusts her in terms of the products that she brings to market. That combination, I think, makes us really a trusted advisor in this space, and is going to allow them to want to lean in with us as we continue to bring innovation to the market.
All right. Kind of going, category by category here. Next one's refrigerated, right? You kind of started with frozen. We heard about ambient. Heard, I think yesterday, refrigerated still now is kind of out there. Kind of, I'm always wondering, when I hear or when I think about the portfolio and I see frozen meals, I automatically go and I think about more of like refrigerated kind of, prepped meals for commissary that could be branded. I mean, some companies do that. Other areas that are naturally refrigerated are usually like dairy based, right? But you're a plant based company, but there could be, dairy alternatives within cheese, milk, yogurt, creamer. You think about doughs, right? Then the rest of it's like produce or salad dressings. So, I know you're not going to tell me what all your new innovations going to be and what those products are. I get it, but like maybe just broadly, when you kind of start dropping, these are big words, right? Frozen, ambient, refrigerated, like these are huge areas. Kind of more conceptually, if you think about refrigerated, I guess what could be some areas that you could attack?
In regards to refrigerated, nothing's really out of the realm of what we would be interested in making. Specifically, when we're talking refrigerated, the new acquisition of Belmont, they have capabilities of making refrigerated bars. So we are kind of in more of that realm. But again, nothing is out of the question as far as what we're interested in doing in refrigerated, ambient, frozen, whatever.
Okay, fair enough. I get it. Yeah, all good. We'll leave it at that for now.
Yeah.
All right. Maybe we just jump to margins for a couple minutes for run out of time. So back to you, Stephanie, I think. I spoke with you briefly last night, kind of walked me through some of the transportation distribution costs and kind of how they're impacting the P&L in the near term. And it sounds quite significant. So maybe I kind of thought I'd give you an opportunity to speak to, firstly, kind of how gross margin would have been ex distribution. And then distribution, transportation. And then secondly, just thinking about, kind of next year, I realize you're not providing guidance, but it does seem like the progression from Q3 to Q4 this year improves, and then maybe first half's better than second half, and maybe just kind of walk through why that trajectory should improve from here.
So one of the things that we talked about last night, Rob, is if you were to look at Tattooed Chef, all of our outbound freight, meaning that all of the finished good freight, which includes container costs, it includes freight, is included in our cost of goods sold. And that's an incredibly important thing to hear, because I know that amongst our peers, people account for things differently. And that is one of the items that differs for us. But that also means that all of the inflationary costs that we're experiencing for Tattooed Chef, that's really been in freight and in that distribution area. And we highlight that within our Q. We started doing that in second quarter because we realized how significant it was to make sure that we're looking at comparable numbers with our peer base, and that information is available to an analyst, to a shareholder. And as we start to look at the 9-month period ended September 30th, you're looking at upwards of $22-23 million. And when you start to take that back into gross margin, Q3 gross margin would have gone up by $8.8 million, and that would have put us roughly 25% gross margin versus the 10% margin that we currently discussed yesterday on our earnings call. And I think that that's an important takeaway. That also means that there is a lot of opportunity within the company that we've already started on. And it'll take a little bit of time, and this will occur throughout 2022, to automate some of the lines, to really streamline our product lines and take, the Paramount facility. The Paramount facility could manufacture all bowls, and there is a very easy way to streamline that operationally and increase gross margin. And then you talk about all of these other things and looking at New Mexico. New Mexico Food Distributors is a co-manufacturer. If we take them away from co-packing and we start to do Tattooed Chef items out of there, as we've talked about at the end of Q1, then you're looking at higher margins. Now let's throw in salty snacks. If you go out and look at snack food companies and salty snack foods, the margin is considerably higher than frozen foods. And the same holds true with most ambient products, including bars. And so as we step away from some of those models that exist within the acquisitions that we've made and they continue to grow, that's where you start to see the margin growth, that and automation. And I know that everybody hopes that these wonderful distribution costs start to come down.
All right. Yeah, well explained. And then I guess just quickly on the SG&A front, it doesn't necessarily seem like SG&A needs to materially change from maybe where we saw it kind of in Q3. I mean, I know you've been investing. I think you kind of deemed it aggressively, but you're obviously investing in the business. It's kind of still early stage. Is there kind of any perspective in kind of how you think about that investment going forward? Is it, we can grow half of sales, or kind of where we are is a good spot, right? And maybe we can, as if we get increased distribution, right, and we can step into other subcategories, and maybe we can actually get better return because we're spending the same, but we're getting more of a lift because of awareness. Or just kind of curious on SG&A and kind of the marketing strategy overall in terms of spend.
So SG&A and marketing, I expect to be very similar for Q4. Moving into 2022, we will outline a wonderful marketing strategy that's currently being worked on and pinned down for the next year that I'm sure during year end we will talk about and expand upon. I'm really excited about everything that I've heard coming from Sarah and the marketing team. There are positions that we add from and like into accounting that affect SG&A, but I don't expect there to be anything significant on that front. The big change for 2022 will come from marketing. But outside of that, we expect costs to remain pretty level there.
Okay, got it. And then maybe just lastly, this might be for you, Sam, let you kind of finish up here. Sure. Since you de-SPAC'd, right, you've had a lot going on, right? They've come to market, new innovation, distribution, 2 acquisitions, gave you the capabilities. I know you kind of continue to speak about, potentially looking at other, sounds like more asset, heavy acquisitions, right? You're looking for the capability, not the brand. Right. Do you feel like you kind of have enough right now? Like you've done enough, you got enough capability? I mean, Sarah's thinking about, she's got 12 different categories in her mind, different iterations, flavors. I mean, it seems like you kind of have a lot that at your disposal already that you might not need like another plant, or that it's all opportunistic, right? Right price, goodbye.
It is. And so I always will, be out there, and I just, over the years, I know so many people and so many plants, so many opportunities. So we will always be looking for more opportunities for capabilities and capacity, because the plant-based food it's just beginning. I mean, this thing is going to just continue to grow, and with Sarah's innovation, there's a couple really interesting concepts that we're already looking for if the opportunity presents itself. And if it's not in the U.S., it could be abroad if the facility and the opportunity is there for the concepts that we're looking for that we think has potential. So we're always looking.
Oh, when you say it could be abroad, would that be kind of like your facility in Italy now, that just in terms of manufacture, not necessarily, I mean, longer term, maybe expand the brand to Europe, but you're speaking more to capability like you have now?
Absolutely. I'm talking about capability and concepts, but definitely we're excited to look at the European market and abroad. There's just been so much momentum, and just in the U.S. that that's been our focus right now.
Perfect. All right, look, I think unfortunately we're out of time, so I want to thank all here, Sam, Sarah, Stephanie, Matt. As always, really appreciate it. If anybody on the line has any questions, feel free to reach out to me. I'm happy to always revert and help. That's it. So thank you, everyone.
Thanks so much, Rob. Take care.
Bye-bye.
Bye.
All right, guys. Well, now that that's finished, I think I should provide some thoughts on what just went down. So at the start of the presentation, Sam mentioned that Tattooed Chef, of course, as we already know, is vertically integrated, which means they control the whole process in terms of growing their produce, putting the food together, packaging, and all that. So they're in full control of that, which means they can control quality. And it also means that they can streamline efficiencies into their business, which should lead to greater margins in the future. And it also means that they can quickly jump on new trends in the market. So if they see, a new trend that they believe could be, could drive growth, they can get on that very quickly since they own all their own facilities and have full control of their products. And Sam also mentioned that Tattooed Chef is now in 13,000 stores. And this is pretty crazy considering that, just 2 years ago, Tattooed Chef pretty much didn't exist. They were just a private label company selling generic, vegetables and whatnot. But yeah, their aim for the year was 10,000, and the fact that they've already hit 13,000 and there's still, just over a month left in the year, that's super impressive. They've knocked that out the park. Props to Matt Williams. That's mainly his doing. But yeah, that's great. Then Stephanie got questioned about sort of the soft Q4 guidance, and it mainly comes down to three main reasons. The first one was less promotion in the club stores or in the club channel. So this means less promotions in Costco, Sam's Club, and just the club stores. This is nothing to be too worried about, as she also explained that during Q4 people tend to eat less healthy, and with the economy opening up, more people are starting to go and eat out at restaurants, particularly over Christmas, as they haven't, last Christmas they couldn't really exactly do that to the level that they can today. And then they mentioned that the Carsten facility will be producing in Q1 2022, where they expect that sort of later in 2022 they should have pretty good expansion in terms of sort of salty snacks coming out of the Carsten facility. They also mentioned that Belmont will also be operational later in 2022. In terms of the Carsten facility, Sam mentioned that there's already 300 people working at this facility, and they are also very familiar with the Mexican sort of products, which is a great bonus. They're also targeting big SKU expansion in 2022. That's probably going to be the main driver of growth. What's really impressive was they started off with 2 SKUs in Target, and today they've already got 25. And in Kroger, they started off with 12 SKUs right out the bat in Q3 2021. And looking longer term, they're aiming for 30 frozen SKUs in each store. And keep in mind, if you times 30 by, the 13,000 stores that they're in, you can kind of, you can see that their points of distribution are going to be massive. And perhaps from that, you could work out and maybe predict future revenue based off that. New products. They mentioned that the new products coming out next year will be incremental, and they don't think that these products will replace each other. So this means that they're going to be entering new categories in different niches. So I actually think it's an interesting question that Rob Dickerson asked, because let's say you have one burrito SKU, and then you come out and you come out with another burrito SKU. It makes sense that the new one could potentially replace the old one on shelves. But I suppose, they're going to be hitting different categories and different niches, so we shouldn't expect that problem, and the new products should be incremental. Flipping over in my notes, There was a discussion about ambient products, and those are coming late 2022. Salty Snacks and Carston, they should be produced by March 2022. In terms of Belmont, they expect that bars should become they should be produced before snacks, which actually kind of took me by surprise. So Belmont should be up and running sort of around the same time as Carston, based off what Sam said. And then they're also confident about this. This here was a question that Rob asked Matt, and he asked him about if he's confident in his ability. He showed great ability at gaining partnerships and getting into stores in the frozen category, and he was asking if he's pretty much got hookups into other sort of categories such as like ambient and like refrigerated products. And he seemed confident that he does have these leads, and pretty much like he's just been passed off from these people that he spoke to in the frozen sort of category. So that's promising. And then finally there was sort of a conversation around margins, and we did see margins get compressed this year, particularly due to inflation, especially surrounding packaging and freight costs, and especially the transportation of the food items. That has hurt Tattoo Chef's margins. I believe their gross margin this quarter was 10%, which is pretty low. But apparently without inflation, gross margin would have been around 25%. And interestingly, within the gross margin figure that they Stephanie talked about, transport costs and freight is actually included in their cost of goods sold. So once assuming that transport costs and freight sort of calm down over the years, we can expect some gross margin expansion, which should make this business more profitable over time on that basis. She also mentioned margin expansion. It'll occur from, snacks and bars. Snacks and bars have higher margins than frozen products. And also the streamline in their factories. So over time, they should be able to become more efficient. Stephanie mentioned that once they have more sort of manufacturing space, they can manufacture all their bowls, like all their entree bowls, for example, in the one factory, which will streamline the process and reduce costs. I'm not sure if I already mentioned this, but Stephanie mentioned that if there wasn't any sort of crazy inflation like we're having now, their gross margin would have been about 25%. So perhaps 25% gross margins might be realistic sort of moving forward, but obviously it depends what happens with inflation, and who really knows. And then finally she mentioned that she expects SG&A levels to remain pretty similar to 2021 for 2022. So she also mentioned that of the SG&A, most of that will be marketing expenses. So I mean, we can't be mad about that. And marketing, a more detailed plan about marketing will be coming out in Q4 during the earnings, I'd imagine. But guys, that's my wrap up for this for this Jefferies Virtual West Coast Consumer Conference. I hope you enjoyed this video. Make sure you like, make sure you subscribe, and have a good one.